If you're planning on moving to Montgomery County, Maryland, well, chances are you'll probably be driving on I-270 a lot. Hop in, buckle up, and let's take a ride, because we're headed north on I-270, passing through Bethesda, North Bethesda, and Rockville. So this 34.7-mile highway, it connects the Capital Beltway, that's I-495, to I-70 in Frederick, Maryland, and is a major commuter route. The southern section is wide and busy, often seeing a lot of heavy traffic. But today, we're catching it on a lighter day. While we cruise, I'm giving you the latest real estate market update, because if you're thinking about buying or selling here, you need to know what's happening. So sit back, enjoy the ride, and let's talk real estate. So January 2025 data is in, and we've been seeing some shifts happening in the real estate market. Keep in mind, these numbers are based on December's activity, since most contract takes about 30 days to close. So if you're a home buyer, seller, or you're just keeping an eye on the trends, this update is all for you, so let's get into it. So the reality is Washington, D.C. area buyers and sellers were very cautious after the election. The new presidential administration and higher than expected mortgage rates, it has definitely contributed to a slow start to the 2025 housing market. And while closed sales were up, compared to a year ago, new pending contracts fell by 6.4% year over year throughout the DMV market. That's DC, Maryland, and Virginia, not Department of Motor Vehicle. In Montgomery County specifically, which we call MoCo, we had 490 closed sales in January 2025, which is 7.5% higher than January last year. However, compared to December 2024, sales dropped by 36%, which is typical after the holiday season. This decline, it reflects some buyer hesitations following the November elections, which created a temporary stall in the market. The median sold price jumped to $599,945. That's a 14.3% increase from last year. However, we did see a slight 2.6% dip from December median price of $615,990. And this could indicate a minor winter slowdown, but prices still remain strong. Overall, homes are sitting on the market a little longer, 19 days on average, and that's up by 4 days from January 2024. Higher interest rates still hovering over 7%. It's also impacted buyers' demand, making some take longer to make a move. And sellers, they're becoming more active, with 626 new listings hitting the market in January, an 11.8% increase compared to last year. This is a big jump from December's 326 new listings, and that's a 90.9% surge as the market picks up after the holidays. The number of active listings surged 33.5% year over year, reaching 848 homes available in January. The month of supply also increased slightly to 1.05 months, and that's up from 0.82 months a year ago. While still a seller's market, the slight increase in inventory, it gives buyers more options. And while the market is showing strong price growth, total showings declined 5% year over year, signaling that buyers are being a little bit more selective. The combination of election-related uncertainty and higher interest rate has definitely created a more cautious buying environment. Now, that was all January data and trends. What's happening right now as of February 11, 2025? Well, inventory continued to increase, and the demand has definitely picked up, especially for turnkey properties and homes in desirable neighborhoods near shops, grocery stores, and restaurants. Just like this area I'm driving through, North Bethesda, aka Rockville. Well located and move-in ready homes, they remain high in demand regardless of post-election uncertainty and high interest rates. Home prices are still rising in the region, though the pace of price growth has slowed down. Looking ahead, buyers and sellers are facing some uncertainty as we head into the 2025 housing market. New administration policies could have a significant impact on the Washington, D.C. area housing market, though it's still too early to tell exactly how. While with boots on the ground, there are some homeowners who fear they may lose their job, and they are already preparing to sell come spring market. On the other hand, we have plenty of pent-up buyer demand who have been on the edge with the interest rates or either been priced out of their desired area. But what they're doing now, they're now adjusting to those expectations. And higher income buyers may be better positioned heading into the spring market, while first-time and moderate income buyers will still face affordability constraints due to high home prices and mortgage rates over 7%. So what does this all mean for you? If you're thinking about selling, home prices are still at a historic high, and now might be a great time to list before inventory rises further, as expected in the coming spring market. And buyers, you might have a little bit more breathing room, but competition is still strong, so be prepared. Catch you on the next one.